This is 8-Minute Market Structure by Texture Capital, bringing you concise, expert insight for better markets. And now your host, Richard Johnson.
Hello and welcome to the latest episode of 8-Minute Market Structure, where I speak with industry experts and get their take on the most important market structure issues. My name is Richard Johnson. I'm the CEO and founder of Texture Capital. We're a digital securities broker-dealer regulated by the SEC and FINRA, and specializing in digital securities. So we help clients compliantly issue tokens representing equity, debt, revenue share, music royalties, and other kinds of investment contracts. Today's guest is Ben Upwood. He's a CIO of ChainLogic Fund and a managing partner at Synchronicity. ChainLogic is a crypto hedge fund whose mission is to help sophisticated investors attain risk-managed exposure to digital assets through a private fund that's registered with the SEC, which is pretty unique, actually. So I'm speaking with Ben today on September 19th, 2022, 4 days after the merge, and we're going to discuss what this means for Ethereum and the crypto space overall. So let's get into it, Ben. As I think most people know, the Ethereum merge represents the transition of the blockchain from proof of work to proof of stake. Can you tell us quickly, why is this such an important milestone?
Sure, and thanks for having me on, Richard.
Yeah.
Basically, I think it's a test and a new network to consensus mechanism to see can we secure a cryptocurrency payment network with putting up coins that you own, that individuals own, instead of having huge mining conglomerates run a system like Bitcoin. So I think what that means in English is basically, can you put your coins up? Can individuals run the network as securely as they can under proof of work with Bitcoin? And so far so good. It's only been 4 days. I think the main thing was could we switch in midair, if you will, with Ethereum between the proof of work version and the proof of stake version. I think that was the real trick, and it seems like so far that they've pulled it off.
Yeah, but it took about 4 years or something, I think, since they started this, but they did seem to pull it off. However, we'd had a nice run up in ETH, the native token, but it's now down, what is it, about 20%? What is this, a classic case of kind of buy the rumor, sell the news?
Yeah, I think it could be partly that. For better or for worse, I think crypto has been very correlated, particularly in the last 6 to 9 months with the broader market, the NASDAQ. Especially, and the Ethereum chart, if you overlay it over the last 3 months, and then even with the merge in here over the last month, it looks very, very similar. So in a weird twist of fate, I think the macro backdrop seems to be controlling everything still. The big question is, I think, how long does that last? And nobody knows the answer to that. But it was a little bit buy the rumor, sell the news. But I think there's also a huge macro rain cloud over everything, most assets right now.
Yeah, you mentioned that you think one of the benefits of moving to proof of stake is that it's not going to be so controlled by the miners, and anyone who owns Ether can essentially participate. Can you explain a little bit, how proof of stake works exactly?
Yeah, so in Ethereum's case, I think it's 32. You need to have 32 Ethereum to basically perform the same function that miners perform in Bitcoin, which is essentially organizing and validating transactions. So there's a few more steps and a few more things around that, but that's the general gist. So one of the benefits is a huge reduction in energy usage. So for the ESG people out there, I think it's a huge positive. And I think the other thing that's really interesting about it is that, from a positive standpoint, is that the issuance in terms of what you pay those people to run the network, in this case now it's the stakers, is far less than what you have to pay the miners to run the network. And so all of a sudden now the inflation rate of Ethereum is way down, almost close to flat. So that's another big thing. I think the negative that people will look at it and say is that they're not directly involved in governance the same way that miners will signal support or a lack of support for some of the governance processes that happen in Bitcoin. Now the stakers have that, can play that role where they have this indirect check on what gets decided on the blockchain. And so if you get a huge concentration, that could potentially be a problem. Or if you have regulators that can lean on one of these groups that have a huge staking concentration, then that could be seen as a lack of decentralization. And so we just have to see how this plays out, because it could end up being very decentralized. We just don't know yet.
Yeah. So the fees have come down, which is great. I mean, I think there's one point last year it was almost $200 per transaction. I think the last I checked is, as of today, I think it's around $1 or even less than that. So what does that? That's obviously great. What does that mean for, like, I guess a couple of questions here. How much yield do you make from staking? In terms of the fees you get if you put your Ethereum up, and how does that affect the profitability of the miners, really?
Yeah, and I think on the fees, it's probably still more a function of activity on the network and demand.
Yeah.
I think there's some upgrades planned down the road here to address the fees and the TPS, the transactions per second, the processing of that. So that'll come. I don't think we've really seen the big change there yet. So fees could sort of be up and down. It's a little bit of a wild card there.
Yeah.
But in terms of the staking portion of things, yes, that is very unique too. So the people that stake, these groups and people that actually stake these 32 ether or more, they're paid for their work they do in validating transactions. And one is this staking yield. So they'll get a certain amount of the coin. Right now, I just looked, it's about 5.5% annualized type of rate. And it's a really new, I guess not really new, but for the big blockchain here, Ethereum, it's new. And in terms of being in production now and out of sort of the test case. And so I think it's pretty exciting. I think the big question mark is sort of the regulation around that. Gensler's made some comments about staking that weren't necessarily positive in terms of, are they, is there some sort of securities contract, if there's third parties involved helping you stake? So there's some things that need to be worked out there, but it seems like I think staking in general is, could turn out to be very positive.
Yeah. No, he said that the staking can be considered like an investment based on the efforts of others, which is a couple of prongs of the Howey test. And it's something we follow very closely, being in the digital security, being regulated by the SEC. I'm not sure if we'll see where that goes. I don't think that he's going to classify Ether as a security, but you never know, I suppose. What about ChainLogic? I'm assuming you hold a bunch of Ether. Are you going to be staking it?
Yeah, we're looking into that for sure. We have participated in staking before, so I think we're familiar with how it works. I don't necessarily see a reason that we wouldn't do that.
Yeah.
We wanted to see from a risk perspective how things went with the merge before we made a commitment to do anything. But we're evaluating it now that it seems like we're I guess almost a week through, and I haven't seen any major alarm bells being rung. So yeah, I mean, it's something that we could absolutely do.
Yeah. Now, how's this going to affect the whole ecosystem? Because we know that a lot of people moved, Ethereum was the first smart contract blockchain. Everyone was building on it. Then the fees got very high. And a lot of people said, well, we can't, we're going to move off onto either other proof of stake chains or layer 2 chains. What happens to those, like, like whether it's Avalanche or Polygon or whatever? Are people going to keep building on those fabrics, or are people going to move back to Ethereum? How do we rebalance this?
That's a really good question. I think you get so many different opinions from different participants. I guess our stance is we still see a handful of chains being around. So whether that's 2 or 4 or maybe 5, I think that's probably that's probably step one. If you get past that into kind of step 2, maybe you get down to 1 or 2 really dominant chains. Again, with Ethereum, I think the jury's still out a little bit in the sense that there's still a couple more upgrades that has to be worked through in terms of sharding and things of that nature to really predictably get their fees down for the long term.
Yeah.
And that's kind of like you said, that's a big consideration when you're choosing between blockchains right now. So I think for the moment they're fine, and I think this will attract more capital, the staking yield and the fact that they've made it through this transition well. And the other blockchains, they have a lot of positives, but they also have some things I think that they need to work on, whether that's security or bridging into them. So I think it's still too early to say.
Yeah, cool. Great, thanks for your insights. Before we wrap up, just question: how's the fund going? It's been a tough year, obviously, for the crypto market in general. What's the ChainLogic performance like?
I think we've done well this year in terms of protecting the downside. We've outperformed year to date through August by about 18%, with about 1/3 of the downside volatility of Bitcoin. So, we're pretty happy with that, especially given that coins outside of Bitcoin have tended to fare
Even worse.
to fare worse. Yeah.
Yeah. Oh, well, great. Congratulations. Keep up the good work, and look forward to having you back again soon, Ben.
Thanks, Richard. Appreciate it.
Thanks. Take care.
This has been 8-Minute Market Structure. Be sure to follow Texture Capital on LinkedIn, where we will release a new episode every week. You can also find us on Twitter at texture_capital and on the web at texture.capital. The foregoing discussion is for information purposes only and does not constitute a solicitation to buy or sell securities. Private securities offerings are not registered with the SEC and are considered highly speculative. An investment in private securities may result in the loss of your entire capital contribution. Blockchain is a new technology and unproven in financial markets. There is no guarantee that tokenization will enable any secondary market liquidity in the future, and you are